I think to a large extent the slowdown in the German economy is behind us. I think if you look at things like retail sales, for example, they surprised on the upside towards the end of last year. So we have a very mixed picture. I think what we saw in the course of 2014 was an economy which lost an awful lot of momentum. Things like the Purchasing Managers Indices appear to have stabilised, and I think to that extent we can expect the German economy to continue growing in 2015, albeit perhaps more slowly than in recent years. So all in all, I'm not overly concerned about the prospects for the Eurozone or indeed Germany, but obviously I think we have to bear in mind that there are significant risks, particularly regarding sentiment shocks and the possibility of further problems emanating from emerging markets. Well, I think the market view is the sooner we get this out of the way, the better. So I think if we can see some form of discussion by the ECB on the 22nd of January, that will at least, I think, remove a major obstacle to markets who've been speculating about this for some time now. But the timing isn't ideal, just 3 days before a Greek election. And I think there is a very strong sense amongst many ECB council members that if the ECB were to announce QE in January, this would perhaps give the Greeks carte blanche to renege upon some of their reform commitments. But the trouble is, of course, that if the ECB were to wait until mid-March, after the Greek elections are out of the way, it may well be too late for QE to have much of a positive impact upon the economy this year. So I think on the balance of the balance of probabilities suggests that QE should take place sooner rather than later. Well, let's start from the premise that QE actually works. I think it's questionable whether QE will have much of an impact upon the economy or indeed inflation anyway. That certainly has been, I think, the experience in other economies where it has been tried. But certainly I do think that if the QE program is watered down in any way, in other words, it's not the full-blown QE that we've seen from the likes of the Fed, then certainly the markets are going to take that fairly negatively. And I suspect we could end up with a period of significant market volatility throughout certainly the first half of this year until the ECB is effectively brought back to its senses and engages in the kind of balance sheet actions which it has promised us.